What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I love this high yield dividend stock. This is probably my favorite dividend stock. It's a real estate investment trust and has actually beaten the S&P, which is like insane. And it's not very expensive. It's a high yield dividend growth stock. And these guys are on a tear. And I'm buying more. I own more than 400 shares in these guys. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Make sure you hit that notification bell as well, because I'm doing part 1 of the series. If you watch my previous video, I showed you my top REITs for 2023. And now each day I'm going in depth with some of these dividend stocks. Tomorrow I may actually review a dividend stock that's not a REIT, but it's brought up some surprises. If you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check this REIT out right now. And that REIT is Arbor Realty Trust. It's sitting at 1413. It has a dividend yield of 11.32%, a PE ratio of 8.58. And as you know, FFO and AFFO are way more important with real estate investment trust. By the way, this is a mortgage-backed real estate investment trust, and usually mortgage-backed real estate investment trusts go through a little bumps and bruises. These guys have dominated against the S&P in the past 5 years, which is quite impressive. Average volume is 1.54 million. Market cap is 2.42 billion US dollars. G range is 1116 to 1885. Day range is 1405 to 1424, and its previous close is 1409. Now, I'm going to explain to you why I own more than 400 shares, and I may get to 600 shares eventually. But man, this dividend income is beautiful. So let's do a review on these guys. So Arbor offers a total nationwide solution for your multifamily finance needs, including Freddie Mae, Fannie Mac, FHA, bridge loans, among many other flexible options. So you see there's mezzanine, preferred equity, single family rental, green financing, senior housing and healthcare, FHA, multifamily, bridge loans, Freddie Mac, Fannie Mae, small loans, and CMBS. I think I already mentioned this, but I'll say this again, single family rental. So let's go a little bit more into these guys. So here's some information regarding these guys. So the Fannie Mae multifamily lender, they're a top 10 lender by volume for more than a decade and repeat top small loans lender. Freddie Mac multifamily lender, they're in the top 3, okay, approved Freddie Mac seller servicer as a top small balance loan lender. FHA lender, so bridge financing, short-term one-stop financing for multifamily and commercial assets, positioned for permanent takeout. And then the mezzanine, solutions used in conjunction with new or existing commercial loan financing to help completing all components of the capital stack. Single family rental portfolio financing, bridge, permanent, and build to rent loan solutions through Arbor's proprietary platform. They also have an Arbor Loan Express, efficient and transparent online loan origination and processing. In-house loan servicing, experienced servicing division that oversees a multi-billion-dollar portfolio and is rated by the S&P and Fitch for commercial and special servicing. So these guys have some very strong backing, as well as I like this top 10 right here, 15th year in a row, and also top 3, especially with Fannie Mae and Freddie Mac. That is very powerful. So right here, Arbor is not just another commercial and multifamily lender, but your financial partner that personally works with you to customize the right loan solution deal after successful deal. Now, this is what's impressive. For close to 25 years, by the way, they did ring the bell one time on the New York Stock Exchange. They have helped multifamily and commercial real estate clients achieve their financial goals by focusing on growing long-term relationships and conducting business as not supply another real estate lender, but as a partner. We value our clients to such an extent that we're more comfortable calling them partners, and their relationships with Arbor a foundation for our business. Now, here's another thing. So I'll go over their office locations as well. So that's always important. You need to have multiple locations. And if you have multiple locations, I'm more attracted to a dividend stock or a company. By the way, this is not financial advice, for entertainment purposes only. Disclaimer in the description. So the thing that's beautiful on their website, here's their corporate headquarters and their servicing office. These are both in New York, but when you go on their website, you can request a quote and somebody will contact you immediately. And I can tell you, I go on a few websites or here and there in the Google search bar, and all of a sudden I see ads by Arbor Realty regarding advertisement. So trying to get, loans. So that's one thing. They are very strong with advertising. I think that's one thing that sets these guys above many mortgage-backed real estate investment trusts, because they're so prevalent. And I'm going to reveal to you their revenue and their dividend history. Their revenue is phenomenal. So here's their revenue trends. This is in millions US dollars. 2015, this is 142. 2016, 213. 2017, 346. 2018, 484. 2019, 535. 2020, even during the pandemic, their revenue has increased. And it hasn't decreased. That's something that's extremely strong with these guys. And then in 2021, 799. So there's a huge increase in revenue. So I know that these guys are a high yield dividend stock. And high yield dividend stocks, you have to be extremely careful, because, there's always a risk of a dividend cut. So, watch the high yield. I'm taking a economic risk in these guys, and it's been paying off big time for me. So I'm going to continue to buy more. I'm going to continue to reinvest my dividends. It would be beautiful if I got to 1,000 shares. That might be my long-term goal with these guys. So I'm going to go over their revenue a little bit more with FFO and AFFO real quick. So I'm going to go over one more thing before I go over a few other things. They generated distributable earnings 56 per share in the third quarter, which is 16 cents in excess of their current dividend, representing a payout ratio of 71%. Now, remember this, with real estate investment trust, 90% of what they make have to go back to shareholders. That's the law. That's the rules. So 10 straight years of dividend growth is a 33% increase, with the lowest payout ratio in the industry, annualized dividend of 160. So right here, shareholder return in 5 years is 221%, which is pretty nice. So 1 year it was 39, 3 years is 119, and 5 years is 221% per their website. Right here, I just want to go for their advantages. Also, they capitalize with $500 million in cash and liquidity on hand. An additional $375 million. This is in November 2022, in deployable cash in their CLO vehicles. Over $2.5 billion of availability in their structured warehouse lines. So right here, this is pretty attractive. So I just want to go over just a few things. And here's their originations. And I'm on their website, and things look very strong. Here's their loan type. Here's their bridge. Right here, 90%. This is for their loan portfolio composition, asset class, multifamily. And here's their geographical location. A lot in Texas, too. So I just want to go over that real quick. Now I'm going to go over their revenue, FFO and AFFO. So here's for the fiscal year of 2021. This was, the FFO per share was 2.67, and the FFO per share that ended in September 2022 was 0.44. So I just want to go over that with the FFO. So there's been a lot of positive news regarding their FFO and AFFO, especially on Seeking Alpha. So make sure you check that out. There's numerous articles. I can go on and on about how people praise their FFO and AFFO. So let's go to their dividend history. Let's start in 2012. It was 8 cents to 10 cents, and then to 11 cents, then to 12 cents in 2013. 2013, 13 cents. Then it jumped to 15 cents in 2015. 2016, it jumped to 16 cents. 2017, it jumped to 18 cents to 19 cents. Then 2018, it jumped to 21 cents to 25 cents, and then to 27 cents. And then you get a little special dividend of 15 cents in 2019. then to 27 cents, to 28 cents, to 29 cents, then 2019, 30 cents, then 2020 it cracked 31 cents. This is in like the middle of a pandemic. And then it jumped to 32 cents, and then in June 2021 it was 34 cents, and then at the end of November it cracked 40 cents. So the payout ratio is 43%. The number of dividend increases in the last 5 years is 17. If you bought one share, you made 160 with 11.32% dividend yield. And look at that dividend growth, 11.83%. That is fantastic. If you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. And as you know, this is not financial advice for entertainment purposes only. Disclaimer in the description. I am long on Arbor Realty Trust unless something drastic happens, like if their dividend growth is not strong or if things just don't look good for those guys. I will get rid of them, but for right now, they're a buy and hold forever dividend stock for me, unless, like I said, unless something changes. You guys take care and have a good one.